After a tough week for big tech stocks, does the group still have the wind at its back? Welcome to Trading Nation. I'm Eric Chemi. Today we've got Chad Morganlander with Washington Crossing Advisors, and Matt Maley is here from Miller Tabak. So let's start with you, Matt. What do you think when you look at tech stocks right here? I mean, they're doing okay relative to their 50-day moving average. So do you think they can keep going higher?
Well, they're holding above that line, and they're still on their nice trend line, even after the big hiccup we got earlier in the week, or I guess technically it started Friday of the previous week. But we do want to hold that 50-day moving average in both the NDX and the XLK, which has been mirroring the same thing as we've seen in the NASDAQ 100. And the key for me, though, is that we've got this these tech stocks have run straight up in a straight line, pretty much uninterrupted. And we've also, at the same time, had a huge amount of leverage added to the marketplace, as we see the New York Stock Exchange margin debt it continues to make new highs. It's 44% higher than it was just a couple, back in 2007. Now, margin debt is a lousy indicator of timing, but when things roll over, I think it's pretty safe to say that these technology stocks have gathered a lot of that leverage in recent months, and if it rolls over and breaks that 50-day moving average, it may cause some of that leverage to be unwound. So we're kind of at a key juncture here. If we get another rally and it breaks up above last week's highs, that's going to be great. If it breaks below Monday's lows, which is also its 50-day moving average, we're going to have a problem there. And my big concern is at some point, some of this leverage is going to have to be unwind. And as good as the group has been, at some point it's got to pull back.
Chad, what do you think about that? When you look at the charts and when you hear what Matt says, what's your perspective there?
So we would be fading this trade. We think valuation does matter, and that the NASDAQ 100 is somewhat overvalued, certainly not at bubble territories like it was back in '99 going into 2000. Yes, earnings have been quite robust for many of the large names, the large cap names, but you're getting to a point where it's a concentrated trade. What I mean by that is roughly 41% of the index is represented by 6 companies. And if you take that out to the top 10, it's roughly 50% of the index. We believe that there's going to be a shift within the overall markets from high momentum stocks, which represent that top 10, to more low momentum stocks over the second half of this year. The reason for that is because we believe that the Federal Reserve is going to start to move a little bit more aggressive, and that overall, the second half of the year won't see as much ebullient earnings growth as everyone's expecting.
Matt, I'll just end it with you real fast. Do you think there's any effect, like Chad just said, he mentioned the Fed. I know a lot of people are looking at what they're doing, obviously, but when you think how it affects tech stocks, a lot of people don't usually make that connection. What are your thoughts on that?
Well, the thing is, number one, even though, and as Chad is absolutely right, it's not as stretched, evaluations aren't as stretched as they were in 2000, that doesn't mean they got to get to that level before they roll back over. Right. But the key, again, is leverage. As the Fed starts to tighten a little bit further, that means that some of this leverage that has been wound up on the way up is going to be unwound. And a lot of that leverage is in these tech stocks. So even though it's an indirect fashion, the Fed will have an impact on these technology stocks, and it will be to the downside, I'm afraid.
All right, well, Matt, thank you for joining us. Chad, thanks for being here as always. Have a good weekend, everybody. We'll catch you next time here on Trading Nation. Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.